What's up, you guys? Jane Ward here, and today I really want to share with you guys some important news regarding the stock market. Now, in the midst of record high unemployment, economy that's still shut down, and negative oil prices, I feel like there's some really big stuff we need to handle and talk about right now. There's two types of people right now when it comes to this investing in this time. There's the one person who is not putting any money in and is holding in constant disbelief that the stock market has to go down more because of all these businesses shut down and still not opened up yet, despite though the market going up. And then there's the other person that's putting all their money into the market as of right now, thinking that they're getting in at a super discounted price because this whole crisis has happened and the stocks have dropped and they're starting to rise. Now, whether or not one of them is correct or not, I honestly say that both are actually wrong, because that's assuming that the stock market is very simple and very straightforward and there's an actual pattern to this. And I don't believe that the stock market is that simple, otherwise everyone would be making a bunch of money off of this. We have some big analysts here that are expecting that we are in the potential of a 2020 Great Depression, and then we also have some analysts expecting that we are in a big bull run. So now we're going to go ahead and dive into some strategies that you guys can use during this time while you're investing in this very unexpected volatile market, as well as some key things that you should not do during this time, because things are very unexpected. We don't know which way things are going to go, so you want to make sure that we are making the smart moves and we are not going to potentially lose all our money when we're starting to invest during this time, because I know a lot of you are trying to invest new during this whole crazy period in time, and that's completely cool. But we also have to know that we need to make some certain rules of do's and don'ts during this whole crazy experience. So to start off this video, it's no doubt that finance has become a very big genre and talk during this whole pandemic. In fact, Robinhood has experienced 300% gains in daily trades since the late 2019 compared to now. On top of that, CNBC has also reported they've seen double viewers from when it comes to down to the finance and making money section, with a bunch of other investing companies getting a lot more volume in their trades. And it's no doubt that a bunch of people are starting to invest because they have nothing better to do. They're stuck at home and they're trying to find ways to make some extra income because they're not working. However, the question is, what is really going to happen when they do that and it doesn't go their way and they're not making money? That I'm concerned about. So on that note, let's go ahead and talk about that person who's not investing yet and who's waiting and sitting down and holding on until the stock market crashes and drops due to the economy. Because I'll admit, it makes no sense that the stock market is trading at the same price as it was when it was October 2019, 6 months ago, and the current situation that we're in right now. We also found that a third of CNBC respondents say that they don't think that the stock market will fully recover until 2022, if not even later. So why are things going up so much right now? But there is one thing that always has to be remembered, and that is this: the stock market is not the economy. Now, of course, unemployment rates and how businesses are doing and how people strongly believe about a company do affect, the stock prices. The two things don't actually have to really correlate. That's why we are seeing that, the stock market is having one of the biggest rallies it's ever had in years to go, in almost a decade. And it's because that the stock market and the economy don't really have to match to each other. This is where we have to remember that the market can remain irrational longer than you can remain solvent. Now, we sometimes see that the stock will take a 10% gap. Now, does that mean that the company lost 10% in that one day? No, it's just caused by panic and fear. But the economy is still thriving and the business is not doing too bad. And then when we see that the stock goes up 10% in one day, does it mean that the business just made 10% extra in that one single day? Absolutely not. So sometimes the economy is going to be different than what the stock price is actually doing, and that's just caused by momentum and fear and changes in how strong people believe in something. It doesn't have to necessarily be hand in hand with the economy. Now let's go ahead and talk about the second person in this whole investing field, the person who believes that everything is at a very big discount price and they could jump in and throw in all their money in and buy out with a Lambo at the end of this all. Although I do believe that things can go up, and I believe that this stuff is going to start to trend back upwards, there is no guarantee. Just because something took a big dip now doesn't mean that it necessarily has to go back up. It could definitely take another big dip. Things can go worse. We still haven't really released and the businesses are starting to fluctuate and go back. Airliners aren't going back yet. Nothing's going really back yet. So in essence, things can definitely still go back down. So in my advice and my honest opinion on what you should do during this whole time with the stock market potentially crashing or bouncing back up is to just buy in consistently, hold long term, and just wait it all out. No one knows how volatile this is going to be. A lot of people love to guess this game, but the essence is that no one has control over the stock market. And that's why everyone likes to give out their best prediction, because no one actually knows what is going to happen. So in my advice, I would say is to go in and get in consistently, diversify as much as you can, and then just hold for the long term and just wait it all out. Do not expect you to make your gains right now, but expect it for the long term. In a couple of years that you will come out much more profitable. And hopefully this is a very good discounted price. However, to get in right now expecting it to go straight back up in a couple of weeks is not very an accurate thing to say, because there can be another drop 100%. There can also be another skyrocket bullish market 100%. We don't know, and no one else can know. And if someone tells you that they know something's going, they don't know the stock market. The stock market's very volatile, especially during this time where we've never really seen this before in our lifetime. We don't know what things are going to do. So go in long term, hold it for a couple years, come out profitable. That is the best situation that you can do. I hope you guys like this video. Please smash that thumbs up button. Comment down below what you're investing in. I really want to know, and we will see you in the next one. Also, if you're not in Robinhood yet, make sure that you go ahead and use the link in the description and you can get a free stock. I will also get a free stock, just to let you know. So it's a win-win for both of us. We'll see you in the next one. Make sure to subscribe. Thank you.